Even while it crosses my mind, no one individual can ever hope to solve the ever-evolving universe of macro like a 3D jigsaw puzzle. Parts and varied viewpoints from other individuals need to be gathered. A lot of time was spent contemplating monetary matters, the economic system, the various tales that follow, the 1930s, the 1970s, and the system's collapse in 2008. When it came to cold, hard cash, I listened to the gold investors. Crypto investors were telling me about a new system, and I listened, instead of using old currency. Furthermore, the majority of us may agree that something is wrong, that growth is inadequate, and that rising leverage slows growth. Investment firm 21 Shares abruptly decided to rename its planned spot Ethereum exchange-traded fund and remove ARK Invest from the application. On the afternoon of Friday, May 31st, they submitted a filing to the Securities and Exchange Commission (SEC). The decision to shelve the crypto product was later confirmed by an ARK Invest spokeswoman, who said the company needed to reevaluate its investing approach. For some in the cryptocurrency world, this action begs the question of the newly authorized ETF sustainability in the near future. Chair of the SEC Gary Gensler said in a June 5th interview that final clearances for exchange-traded funds ETFs managed by asset managers might be slow. Incoming. Applicants' S1 registration statements are still pending SEC approval. In spite of this, the January launched spot Bitcoin ETF from ARK Invest and 21 Shares will continue to operate as a partnership. In this week's Crypto Biz, we also look at the following topics: the Taproot acquisition, Ava Labs financing Galaxy Digital's tokenized loan for Animoca brands, and the first reports from Bitcoin miners after the halving. U.S. employment statistics that was characterized as schizophrenic caused the biggest cryptocurrency to undergo unexpected volatility during the previous Wall Street Open. The situation was made worse by a trend in alternative cryptocurrencies, which was set off by the market's reaction to investor Warren Kitty's live video. U.S. inflation data and the FOMC meeting next Wednesday are looming on the horizon, but uncertainty has prompted a risk-off attitude in the market. The most recent update from QP to its Telegram channel subscribers discussed upcoming macro data prints, such as the CPI and the Federal Reserve meeting to decide interest rate policy. According to the update, the simultaneous collapse of alt and microcoins, which wiped out more than $40 billion in market cap, was likely caused by Warren Kitty's live webcast, which had about 1 million viewers and during which GME stock prices fell. Nevertheless, the company regarded the recent flows in BTC and ETH as promising possibilities to purchase the dip, eagerly awaiting prospective actions by the Federal Reserve to bolster risk assets. In my opinion, that is completely correct. The key is to learn the system that actually exists, not the one you envision. This is especially true in the Bitcoin community, which is just as staunch as the gold lobby and takes great pride in its status as a deflationary currency. Deflationary money simply encourages hoarding, which makes it extremely difficult to run any economy. Also, no spending if there is no stockpiling. Yeah, I believe that initially a deflationary currency would actually make inequality worse rather than better. Perhaps this will change as the system matures, but I think that for a while that would be the case. Yes, I think so too. Because your wealth grows annually, it all comes down to how much you own. Additionally, it drains the purchasing power of the system. Therefore, it isn't ideal for it to exist for. Gold to exist as exit strategies or even as a foundation for a new system. It's all right, but I really doubt that you will ever find a way to circumvent the problem. I don't think so. And we've seen that. For example, the gold markets' views were very similar to those of the cryptocurrency market. Because we are fallible human beings, we adore leverage. I literally just lifted this idea from the gold market. We will build leverage on everything you offer us. That has collateral value, which will make the supply go higher. We make our living doing it. We're simply this aspect of being human. Consequently, we shall make that again, returning to a gold standard tomorrow. Wouldn't stop us from leveraging it until it collapsed. The most crucial component is the dollar. Furthermore, there is a systemic problem with a dollar shortage that necessitates the issuance of additional dollars by non-US institutions around the globe in order to supply dollars, as there is no longer a scarcity of means to pay for them. Am I correct? The interest on the dollars is something that everyone has to pay. Interest payments increase as debt levels rise. Neither do they possess nor are they able to generate dollars. Money would be necessary for them to borrow money from the US or generate additional dollar liquidity. Plus, the argument you make is really deep. It took me a while to get it. George Soros's The Crisis of Global Capitalism is worth reading again. He argued that the Asian crisis is like a periphery to core problem. It begins on the outside and moves in. Although I was confused, I thought it sounded really astute. As a result, I just kept saying it. However, in essence, he embodied the Eurodollar market's dilemma with the Asian crisis. Those countries' economy had begun to decline, they had borrowed too much money, and they were unable to repay it. And it had a domino effect that spread throughout the industrialized world. For example, Swiss banks went bankrupt, and that was just the beginning. Just one more thing to get your point understood. There's this expression that, once again, nobody gets when the United States gets a cold. The rest of the world gets the flu. Everywhere a cold spreads from the United States. Yes, I understand. Since the United States is the principal operator of everything, regardless of whether it knows or understands it, included in this worldwide reserve currency is this. That is the reason I bring up the topic of global liquidity and the significance of it all, because it is interconnected. To hell with everything else. In the end, it's all that counts. It's that simple. Everyone is free to take liquidity from their own assets as of last year, 2022, when the US began doing so. That's not good. Inflation rates fall. The debasement or rebasement of the currency is the primary reason why markets first decline when the US withdraws cash. As you indicated, withdrawing those hard dollars makes the dollar stronger. Consequently, the dollar goes up and asset prices go down. Things begin to explode, though, during that time. The regional banks of the United States were the first. This isn't usually the case, although it did happen in the United States. Later on, Credit Suisse was involved. The dreaded dollar yen followed. This is just one big problem.